We've had a great bounce on the S&P, but we're not even close to getting back to this trend line, which is really where the big test for the S&P is going to be. If we can get above this trend line, okay, game on. We'll move above, let's say, 7,000 on the S&P, maybe even continue to climb into early 2026. Gold is pushing above this little wedge pattern. We need to monitor this. If we close above and confirm, gold will likely head back to our all-time highs. And what we have to monitor, do we close above today? And do we confirm on Monday? If we do, double top at around 4,400 could be in the card. Look at the move on silver. It's back to its all-time highs here. This is what we would call a triple top. But again, triple tops, believe it or not, are not as strong resistance levels as our charts for double tops. If we break through and confirm above this double top or this now triple top, we're looking at around 57 as our first stop and then 60 to 62. But very impressive price action on the metals.
Recent surges in gold and silver markets highlight structural shifts, with gold hitting a record $4,381 per ounce in October 2025, driven by BRICS central banks' aggressive buying that reduces global supply and bolsters prices. Silver is outperforming, making a new all-time highs, $56.49 amid technical buying, with forecasts suggesting potential rises to $57.62 if resistance breaks, though peace talks could dampen demand. Optimism over Fed rate cuts supports a fourth monthly gain for gold. Co-founder and pro-trader at In the Money Stocks, Gareth Soloway, a renowned financial expert specializing in chart analysis and technical trading, provides his breakdown of key market movements. Soloway notes that while the S&P 500 has had a great bounce, the big test will be getting above a key trend line, which could lead to a move above $7,000 and possibly a climb into early 2026. However, he suggests the S&P 500's bounce is nearing a resistance point, the 786 Fibonacci retrace level, and a gap fill. This topping point coincides with the VIX Volatility Index falling sharply and approaching a support trend line at the 1660 level, suggesting a potential turn-up in fear and a topping for the market. Based on this analysis, Soloway is looking to accumulate short positions today and on Monday, especially if the VIX tags 1660. He also discusses gold and silver's impressive price action breaking out of patterns and the rally in Bitcoin, where he has gone long with a target of around $100,000. Let's watch clips from Gareth Soloway's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
This is your S&P weekly chart. And again, we still are in a position where we're still being encapsulated by this parallel. And again, what we're really watching here is we've had a great bounce on the S&P, but we're not even close to getting back to this trend line, which is really where the big test for the S&P is going to be. If we can get above this trend line, okay, game on. We'll move above, let's say, 7,000 on the S&P, maybe even continue to climb into early 2026. But history has shown us that this parallel has literally picked every top and bottom in the market, from the COVID lows to the bear market lows, to the liberation tariff sell-off in April 2025 lows, to the bull market of 2021. That was the high. These have been the lows. And so as a technician, I have to go on the assumption that this is a major high until proven otherwise. Now, in that same realm of analysis, if we flip back to the daily chart, I'm watching very closely on this fall from the all-time highs to this low and noticing that we're getting into some Fibonacci retrace levels. If we look at this, you can see the 786 Fibonacci is right here. In addition, we have a gap fill just above it right there. So this is going to be right in here. To me, this is going to be the first big test on this bounce for the S&P 500. Now, for me, I'm keeping an eye on other things as well. I'm taking very close note that the VIX, the volatility index, has fallen 40% in 5 days. That's a massive fall for the VIX, right? In addition, and again, I'll go over what the VIX is in a second for those of you that are newbies, but look at how close we are now to a support trend line. Notice how the VIX, which is the fear index, has been making higher lows all along here, it would make sense that the VIX could touch this 1660 level right here and then potentially turn up. Now, the kicker is, what is the VIX? For those of you that don't know, the VIX is our fear gauge. It's when it's down, it shows less volatility, aka complacency. And when it goes up, it shows fear starting to come in. And so if you use that in conjunction with the S&P 500, for instance, that's approaching the 786 Fibonacci, the gap fill has been up for basically now almost 5 days, or 5 days up in a row, a big bounce. You start to kind of connect the dots here that the VIX is getting towards support, which would trigger a bounce, which would be an incline in fear. Fear would go up. The markets are just about at a topping point where they're going to hit resistance. So for me, I'm looking to start to accumulate some shorts today and on Monday, especially if the VIX tags 1660 and the S&P tags those key levels we just discussed. Now, flipping over to the dollar today, the dollar, we talked about this last week. I put this trend line in. Look at how it just came right down to the trend line and is trying to hold it. Now, again, we'll have to watch and see, because what are we watching here before our eyes? Essentially a wedge pattern forming, right? You have this upsloping trend line slowly getting tighter and tighter. You know, again, at some point, price is going to be forced to break down or break to the upside. So again, the dollar is coming in. Interestingly enough, we are now only about 2 weeks away from the next Fed rate decision. Now, a couple weeks ago, that Fed decision was looking like no cut at all. 30% chance of a cut 2 weeks ago. As of today, 87% chance. In terms of the Fed watch tool, that's a pretty darn good bet that it's happening. I mean, that's almost what we would almost call a sure thing in the Fed watch tool game. All right. So again, we are expecting a 25 basis point cut in December, which is part of the narrative for why the markets have bounced. The other question is, what's the new narrative going to be that's going to bring the market back down? Is it going to be like, oh my goodness, the economy's weakening? Or is there going to be other factors? These are things we'll have to watch and see. But what I always do is I follow the charts. Here we have a chart of Nvidia. And Nvidia, for me, folks, what I'm really watching on this is you have this zone, right? We have this zone of support. And again, you could even extend it out a little bit more. But essentially, Nvidia, going back to July, broke into this range, chop, 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 got above, came back, then pushed up, and now it's broken back inside of this. Nvidia has to hold this 167, 165 level right down here. But this is why you're starting to see a little support on Nvidia, because you have all this sideways chop in here. Now, if it breaks below this area, let's say around 165, that's where things can get nastier, and we likely head down toward the 150 level, which has been my longer term. Even when we were trading above 210 recently on Nvidia, I said, guys, this will come back to about $150. That is going to be our former pivot high from 2024 and likely will become major support. Flipping over to Bitcoin today, Bitcoin continues to rally. I did tell you guys that I did go long on Bitcoin with members of Smart Money Crypto. I also went long ETH. I went long Cardano. I went long SUI. I mean, I just, listen, when the charts are when you follow the charts, especially in crypto, things tend to hit support levels very, very often. Now, as I've been crystal clear, I still think we're going down to 73 to 75,000 eventually, right? But if we flip back to the charts, there has been a level that I've talked with you guys about that would be the level where we could get up to, right? And it's really right in here, right around 100,000. And so what's amazing is last week when I was talking about a bounce back to 100,000, we were still trading down around 86,000. It was touch and go. Well, guess what? We're now back to 92,300. Remember I should say earlier this week, right? I keep on saying last week, but that's just because to me, it seemed like a weekend with Thanksgiving. But in reality, earlier this week, I talked about my favorite opportunities. One was strategy into massive support right here. Look at this, closed at 175 and change on Wednesday. It's trading at 100 near 182 now today. So great move on strategy as it begins to push up. And this should have a significant bounce, guys. I mean, you could be looking at a bounce. If we get back to about 100,000 on Bitcoin, we could be back to 220 on strategy, which is still another basically $40 of upside. Now, listen, if we don't get quite back to 100,000, it could be a little bit less than that. But I still think this chart bounces, albeit maybe goes lower later on when Bitcoin does finally turn back down. But that's been a good one, guys. And again, just keep in mind, remember, guys, I'm a swing trader. So I'm going to be watching the charts as we get these bounces with my own positions. And when I think time is up, I'm going to take it off the table. And so it's not something like I'm not saying, oh, I love and I'm going to buy MicroStrategies for the long term. I couldn't care less about MicroStrategies in the long term. I'm using it as a trading vehicle to essentially make money for myself and my family, right? And that's really what investing should be about. It's about producing results. And that's why I love charts, because they give me the probabilities to do just that. Okay, next up, let's go to gold here, guys. Gold is pushing above this little wedge pattern. We need to monitor this. If we close above and confirm, gold will likely head back to our all-time highs. I've been a little bit skeptical of gold here because it just didn't seem like a good enough flush to kind of take the weak hands out. But listen, the chart is the chart. And what we have to monitor, do we close above today? And do we confirm on Monday? If we do, double top at around 4,400 could be in the card. So I'm really focused in right here on this price action today, and then whether or not it confirms the breakout of the wedge pattern on Monday. Here we have a chart of silver, and look at the move on silver. It's back to its all-time highs here. This is what we would call a triple top, but again, triple tops, believe it or not, are not as strong resistance levels as our charts for double tops. Double tops are the best. Triple tops are good, but it's already a weakened level at that point. So let's watch really closely here. If we break through and confirm above this double top or this now triple top, we're looking at around 57 as our first stop, and then 60 to 62. But very impressive price action on the metals. And again, you know, it just shows this insatiable demand, not only from retail, but also from Federal Reserves around the globe, central banks, governments. Everyone is saying, wow, we don't trust fiat currencies. And by the way, I agree with that mentality 100%. You know, how do you trust a fiat currency when it can just be printed ad nauseum, right? I mean, it's just like, you know, you're just basically asking to lose money over time if you hold dollars or if you hold yen or if you hold anything else in terms of a fiat currency until it gets backed by something physical that you can actually, you know, say, okay, there's a value to this and it can hold its value.
As Gareth Soloway emphasizes, the current market landscape demands patience, discipline, and respect for technical levels. With gold and silver approaching key breakout zones and broader markets flashing mixed signals, he urges investors to stay grounded, follow the charts, and avoid emotional decisions. His final message is clear: opportunities are forming, but timing and strategy will determine who truly benefits from the moves ahead. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.